If you own a condo in Calgary, then we need to talk because the April 2026 numbers are in and, well, it's officially a buyer's market. Condo inventory just hit over 1,900 units. That's about 27% above long-term trends. And there's about 4.5 months of supply. Buyers definitely have the upper hand. Benchmark prices, they're sitting at about $301,000, down about 9% from last year. The hardest hit areas, those have been the Northeast and Southeast District. But here's the good news. I think the bleeding has slowed. Prices have stayed flat for 4 months now in 2026, remarkably stable. So I don't think we're crashing. We're finding the price floor in the market. The pace of new listing growth did slow a little bit in April. This is a mild positive signal, but it was not enough to prevent further inventory accumulation. From what I see it, there's no near-term catalyst for meaningful price appreciation in this segment at the city level, but likewise, no catalyst to the downside either. Plain English, I think we're just going to go sideways for the foreseeable future. This means that we're likely seeing the floor of the market. If you survive the 2025 dip, the current data is starting to suggest that values are finding support at these price levels. And this is being supported by a still resilient local economy in Calgary. Now, the supply hurdle. Inventory, it's the biggest headwind. With over 1,900 units on the market and 4.5 months of supply, it's officially a buyer's market for condos. So don't expect a quick flip at record prices. Selling now, it requires aggressive pricing and move-in ready presentation. The current inventory peak, well, it's a result of that record-breaking completions that we saw from the 2024 construction boom. Once this wave of new build supply is absorbed, which I think will happen over the next 12 to 18 months, the lack of new project starts in 2025 and 2026 will eventually tighten the market again. There have been no new condo launches for pretty much 2 years now in Calgary. And the rental market, well, your saving grace, according to CHMC's rental market survey, Calgary vacancy rates are up to 4.9% in 2025. This was a moderate increase from about 4.6% that we saw in 2024, but a massive increase from 1.4% seen in 2023, really at the market peak. This was the tightest market in over a decade in Calgary. If you price your units correctly and aggressively, though, there is still very strong renter demand. Me personally, tenants in one of my condos moved out at the end of April, and I already had the unit re-rented within about a week and a half to move in June 1st. And that's where you need to focus on tenant retention, because it's cheaper to keep that good tenant than to compete with the surge of brand new rental completions that are hitting the market right now. If you want your tenants to stay, then 3 months before the end of the lease, approach them with an offer to renew for another year at the current rental rate. Most will, even if more affordable options are available, because it's typically not worth all the hassle for the tenant to move to save just $50 a month. They just won't do it. Now, here's my strategic outlook. Set it and forget it. The market is shifting toward balanced conditions overall from what I'm seeing. Condos are lagging behind detached homes, but I am seeing price stability in 2026. And 2026 is a year for patience. Interest rates, they've stabilized around 4 to 4.5%, so the cost of carrying your investment has been pretty predictable over the last 18 months. So those who hold through the supply correction, I think, are going to benefit as that construction pipeline slows down significantly later this year and into 2027. So here are my final thoughts. I really think that the market has finally found its floor. The benchmark price of $301,000 right now, that has held remarkably stable for 4 consecutive months. This is signaling to me that initial shock of rising inventory that we saw in the market has been absorbed. We've moved from a speculative growth phase into a yield-driven consolidation phase that is probably going to last another 12 to 18 months. Now, real estate wealth, it's not built during the spikes, it's preserved during the plateaus. If your property is occupied, your mortgage is being paid down, time is your greatest ally. Stay focused on your rental cash flow, keep your tenants happy, and otherwise, let the market cycle do the heavy lifting while you wait for the supply-demand balance to inevitably tilt back in your favor. Oh, and before you go, don't forget to subscribe to my channel for more real estate investing content. Thanks for watching.